Jen's Go Crypto Investing. Comment down below, like the channel, bell notification, and most importantly, subscribe to the station to get the education and information you need with truth and integrity on all things that have to do with the financials, institutions, stocks, commodities, cryptocurrencies, and the rest of them on your goal and your mission to asset acquisition to heighten and change your standard of living for the better on super simple and easy steps to trade this market and acquire assets. You can see the US dollar index has been overall since 1967. It is down 16.16%. And approximately from its high, it is down 32% in purchasing power since 1983. And one of the things that you can see here, and it's very important, and that's why I constantly bring in the dollar, is because the higher the dollar is, the lower prices cost. And as bad as inflation has been over the past three plus years now since COVID, it is substantially better than it could have been because we had a rising dollar, right? If we look at the past 5 years, you can see COVID started in 2020. The dollar went up at its peak 24.72% approximately. And that was helping to tame inflation the best that it could. Say the dollar was down 24% during the same 3 years, inflation would have been probably 25 to 75% worse than it is right now. So we can all think that the dollar actually went up, but now the dollar coming off its high since about October of 2022, the dollar's fallen 10 or so percent. And that's going to be interesting to see if that continues. We slipped the 100 handle, which we briefly did earlier today. And if we trade down through the 90s again and approach the 89 spot range, because that would be a horrible, horrible chain of events in the United States, right? And that's not what we want to see, but that's exactly what we may see. As you can see, U.S. stocks celebrate as cooling CPI fans sentiment, which it was up 3% year over year for June, I believe, but that is up. So that's 3% in 12 months, it was up. And in the prior 12 months, it was at like 7.5%. So in 2 short years, inflation is up almost 11% on the official numbers. And if those are the official numbers, you can probably double for what it is actually in the real world when you're going out and living your life. And you know the groceries, what they cost, how much your consumer goods cost, and your necessities to live cost, right? You can see sugar closes higher as weekly dollar boosts commodity prices. As a weak dollar, there was an article in here that I wanted to read. Dollar sinks on increasing chance the Fed rate hike regime may soon end, as old Vincenzo's been talking about, and that's forcing the dollar down, and that's forcing commodities up. And that's very interesting, right? And there's been a lot of bear market rallies in the stocks that have turned, in some cases, into new bull markets as they've taken off the old highs, and they're up better than 100% from their swing lows. The dollar index Wednesday plunged 1.17% and posted a 14.5 month low, just like we talked about a second ago. The dollar sank Wednesday on speculations the weaker than expected US June CPI report will promote the Fed to end its rate hikes campaign sooner than expected. As you know, we've had a long-standing idea that at some point during 2023 from last year, we thought the rate hikes would stop, right? It hasn't broken anything really in the economy yet that we can visibly see at the people level or at the consumer level, but in the backgrounds and in the shadows, a lot of things have been broken, a lot of things have been hurt. The banking sector, major banks, corporations have filed bankruptcy, all kinds of nonsense is taking place. It's just not being promoted on the TV yet, so the average American has no clue what's actually going on behind the scenes. The CPI report promoted onto the Fed sooner than expected. Also, lower T-notes yields Wednesday weighed in on the dollar and strengthened stocks. Reduced liquidity demand for the dollar. The U.S. June CPI was plus 3% year over year from plus 4% year over year in May. Better than expected, plus 3.1 year over year, and the smallest increase in 2.25 years. Also, June CPI X food and energy, and the reason they put that X, excluding, not counting food and energy, is because that is the two most important things that would affect the CPI, so they take those out because energy is astronomically higher and food is astronomically higher. That 3.1% would probably be like 15%. Ease to plus 4.8 year over year and 5.3 in May, better than expected 5.0 year over year, and the smallest increase in 1.5 years. So, what in layman terms, what that means over the last 2+ years, we've had 15 or so percent inflation, which is fucking crazy. I'm feeling it, you're feeling it, we're all feeling it. The poor and the middle class are hit the hardest. The Fed being booked with neutral for the dollar. It stated that the overall economic activity increased slightly since late May, and prices increased at a modest pace overall in the months through June 30th, the report said. Blah, 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 blah. Wednesday, hawkish comments from Richmond Fed President Barkin were bullish for the dollar when he said, even though the U.S. inflation slowed in June, it is still too high, which is correct. He's not lying there. Our target is 2%, which is horseshit because they're targeting 2% inflation. So that means over 20 years, you've had 40% inflation, nearly 50% increase in the standard of living over 20 years in the federal government and the Federal Reserve, and these charlatans, these criminal gangsters, and these scumbags think 40% 20-year increase in the cost of living is acceptable. It's a travesty, right? It's a bunch of nonsense, and it's only going to get worse. The Mexican peso is actually gaining on the dollar. The Euro USD Wednesday rose by plus 1.14%, but the USD to Japan went down 1.4%. August gold Wednesday closed at plus $24 or 1.25%. Silver closed up massively, $1.02, up 4.42%. Precious metals rally Wednesday with gold posting a 3-week high and silver posting a 1-month high. Wednesday sell off in the dollar index to a 14.5-month low. And that's something that you guys need to be paying attention to. And the one thing that everyone liked to say during about a 12-month span in the crypto history is crypto is not correlated to the dollar. It's so if the crypto is like gold, right? It floats on its own and it prices in inflation. So if the dollar goes down, gold goes up. Usually, there are exceptions to that rule for short, brief periods, but by and far, over the long term, the dollar's down, gold is up. The dollar is substantially up, gold is going to go down. But people thought crypto was the same way, and that is not. I was telling them back then it wasn't true, and it is still even more evident that it's not true now. And you notice these stations and the media on the mainstream or the YouTube charlatans or paid promoters or the big crypto stations don't promote anymore that if the dollar is going down, crypto's going up, or if the dollar is going up, that's the reason crypto's going down because the dollar has been going down now for about 7 months, and crypto uh, started to come up, but it's just been trading on its own more. So it's more correlated with the Nasdaq, right, or the S&P. If the Nasdaq and the S&P are going up, crypto is going up. If the Nasdaq and the S&P are going down, crypto goes down. But you notice in a lot of these stocks, like Apple, IBM, Facebook, Twitter, Amazon, Tesla, all these, they all have this big correction like this. But a lot of these now are way up here again. They've rebounded. In Apple's case, and Amazon's approaching that amongst other companies, they made all that money back and they're way up here, while crypto is still down better than 55%, and Bitcoin, right? But all these other nonsense coins, it's not the same. A lot of them are still down 80, 90%. They have not had the recovery that most people would have anticipated when looking at the stock market recovery. But the more important thing that we're looking at here is if we pull up the gold chart, finally, this is going to be a long video and probably nobody's going to watch it, but I'm still going to put it out. You can see we're still at this huge cup and handle where you have the huge run up, the cup, the handle, and then you can see the cup there, right? And this would be a nearly the cup and handle started with the blow off top in 11. You had a nearly 14-year cup and handle, and now you're in the handle part ever since COVID started when you had the final run up. You traded in the handle, which is a down and sideways consolidation after you get rejected up here at the neckline, which would be the old swing high from 2011 to the new brief all-time high in the same area in 2021. And then you have that down and sideways consolidation, which is the handle, which is usually signifying that eventually when it finally does break the handle, as you can see, we're running up. First attempt rejected, second attempt rejected, third attempt rejected, but now holding support at a critical level right here, the old all-time high from 2011. And if you break that, and if the Fed, and here's what I'm trying to tell you, if the Fed does not raise rates at the end of this month and they pause the rate hike, you're going to see a hyper move in gold all the way up to, not all the way up that high, but you would see a hyper move in gold all the way up to its next level at $2,500. You would have an immediate spike in gold if the Fed calls off the dogs, if the Fed reverses policy officially, even though they unofficially did it when they started bailing out the banks that went bankrupt about 4 or 5 or 6 months ago. But you would have an immediate 30, 35, 40% move in gold. And this target that we've had up here for quite some time, since we tried to break out of here at $2,531, will get hit quick, and you would have to already be in your positions because the price would skyrocket if they do not raise rates. Even if they just pause a rate hike, you're probably going to get a $250 an ounce pump initially in gold, and it would be a phenomenal pump. And the upside potential out of this cup and handle is all the way up here at $3,500, and that would be a huge move if this breaks out to the upside eventually, because from the neckline, from the old all-time high neckline to that target would be 103% move in gold. And if that actually happened, these mining stocks would go crazy. As you can see, this is the companies that I currently own and have owned for 3.5, 4 years. I've just been slowly accumulating B2 Gold, Newmont Mining, Kinross Gold, Pan America Silver, First Majestic Silver are all companies that old Vincenzo owns, along with some other index funds in gold, right? Gold mining stocks that I have several hundred shares in. But you can see B2 Gold right now. We came off that huge all-time high, which looks to be, at least according to this chart, up here at about $7.50 during COVID, and then it came down and had a huge correction, a huge crash, a huge bear market right after the huge rally, and we were down better than at its current swing low, 62%. But you can see now we've had a nice bounce back with gold. And if the Fed doesn't raise rates, here's what I think would happen in B2 Gold. If the Fed does not raise rates at the end of on July the 25th, within the next 6 weeks after that, you would see a hyper pump up here to its old all-time high from 21. I think you would quickly trade up back to $7, and that would be a phenomenal move from the current price. That would be up. It'd be a better than 100% move if the Fed does not raise rates at the end of the month. If the Fed gets raise rates, but they're only a quarter basis point, and then they're really signaling that that might be the end. A quarter basis point, I think gold would still trickle up into this $4.50 to $5 range initially, right off that move, right? If the Fed starts to get more bearish for gold and start saying, and they raise rates, say a half a basis point, which there's no chance they're doing, you could see B2 Gold sell back off into this red trading zone, which, as we know from the crypto videos, is the VP volume indicator over here, right? I think you would have a double bottom here, and then that would be your base to slowly start to trade back to the upside. So this is one I'm very bullish on. I think eventually in 4 or 5 or 6, I told you 2 years ago, in 5 years, which would be 3 years from now, and I'm still not changing that, I thought we'd be past the old all-time high, and we'd be trading somewhere between $7 and $10 when we started talking about this a couple of years ago. And I still have no reason to change that opinion. Newmont Mining is the same thing. You can see Newmont Mining is a very, very big gold corporation. It's one of the biggest ones we got in this country. And you can see through the history of Newmont Mining, you go through big areas of dumps and then a small time frame of a huge pump, then a consolidation, right? With big dumps in that consolidation. Then you go through a quick span where it hyper pumps, then a long consolidation, and then a dump, right? Then a quick pump up, and then a consolidation and a dump, a huge pump back up, a quick consolidation and a dump, nice pump. You can see it's series of pumps, consolidation, and a flush. And that's what happens here. You can see, look how quick this pump went from December of 77 through April of 81. So within 4 years, it went up 377%, right? And then it dumped right after that within a few short months, 61%. And then on its next hyper move up, you had from the time of the breakout to the all-time high, you went up 300% again, and you did that in a matter of How many days? The start of that would be 86 to 87. So less than a year, you went up 300%, right? You get the picture. Then you had a huge dump there, then a quick W bottom and a pump, right? So the only way you get this run is you got to get in and you got to ride the pump. And right now, during COVID, you had big pump during COVID right here in Newmont Mining. See that you had one big pump here in 2016, consolidation, and then after this huge pump and the consolidation, you pumped again, and you had a nice big shot up during COVID. But then since COVID now, you've come down better than I believe 50% from its high back here at about $85, and at its swing low, you lost better than 55%, which is a healthy consolidation. And I think when gold does eventually get to $2,500, I think Newmont Mining, even though it seems like it's a lot, but it's a huge gold corporation, I think Newmont Mining might be up over around $100 or so in the next bull run in Newmont Mining on the next hyper pump, hyper move to the upside. I think you're going to end up way up here, not $140 you could, but I think you're going to be at least $100 in the next bull market. Could you come back down into this range? Absolutely, right? You could come down to 26 to about $43, but that would be a great buying opportunity. But this is already a good buying opportunity because you're buying it 50% off. Say it goes down another 50%, you double down on it because you know you're getting close to the bottom. And when these bottoms happen, when these bottoms take place, when these bottoms move, the price jumps very, very quickly, and you have to be in your positions. You can't try to buy in on the way up because it literally happens very, very quick. The same thing with Kinross Gold. You can see its old all-time high back in 98 was up there in the mid 20s, approaching $30. Is that what that shows up there? No, that's not right. Get off there. Its old all-time high was up here. Yeah, it it absolutely was. It was up here at about $33, and then we had a huge sell-off because that's what happens in gold. But then we had a big bear market in gold in 2000, 2001 through 2008, and then it finally settled. You can see you had a nice uh, uptrend and a bottom, then a hyper pump, and then '06 to '08, and you had a huge pump, right? You had to be buying in on the way down. If you would have bought in 50% down and then bought it again on another 50% dump from the time you bought it, you'd been fully in your position and really had a massive return. And then we had a huge dump during that 2011 to 2015 period. And then as we got our way into 2015 and 16 and 17, we had a nice bull market that culminated to the blow off top during COVID. And since then, we've had a big dump. But I think this is another good company on the next hyper move up. If we got the 2,500 in gold, I think you'd be approaching its old all-time highs again, nearly a six-fold increase in current price. And I own a lot of shares of this company. I'm building my stack in Pan America Silver, and all four of these companies pay a very variety of dividends ranging from 2 to 6% a year. So you're getting 2 to 6% a year on each of these companies that I'm naming. So you could, in theory, lose 6% for a year on Pan America Silver, and you're getting 6% in shares and dividends. So essentially, you're even though your account says negative, you have 6% more shares at the end of the year for when the price eventually goes back up. And this is one too that could, in one day, you can see the volumes that's come out is slowly and steadily with fortitude been trending to the upside. You see the big volume here the last couple of years back there. I think eventually on the next great bull run in silver, I think you could be looking at a 5 to 10 fold increase in Pan America Silver, along with that healthy, lovely dividend that they pay. And I think they pay 3.25%, 2.75% for Pan America Silver. Kinross pays 2.55%. Newmont Mining pays a very respectable 3.69% dividend. That's a healthy dividend for a big company. And then B2 Gold pays a very respectable 4.42% a year just to have the shares being held. And then First Majestic Silver, AG, they pay a low dividend of 0.40. This is more of a speculation stock, not a speculation, but it's a little more risky than the other gold companies that I just mentioned, but I think it's a very, very good buy right now. It's very, very beaten down. It's been as low as $4 and change recently, or approaching $4, but you can see from its all-time high, it is down 78% because silver has been getting beat down from its $30 to about $18 over the last 2 years, but now it's rallying. And I think in the next bull market, First Majestic Silver could pull a Mr. Copper type move, or could pull a Fremont mining type move where you have a hyper pump and you do something that nobody thinks can happen in one day over a 6 month period. You're sitting up between $30 and $50 in First Majestic Silver. Like, subscribe, and share. Don't be shy on the gold and silver mining stocks and the commodity market. Don't sleep on it. If you sleep on it, you're going to miss out on a huge, huge payday. You have to have patience in this sector. It has to be money that you don't need, and it can just sit there year over year, similar to a 401k where you only add into positions when the time is right. And then when you have days like this where gold goes up 25 bucks and silver goes up $1, the mining stocks respond 5 to as much as 15%. In Fortuna, 10.7%, Metallo Royalties 8%, Goldfield 8%, First Majestic Silver 8.93%, Pan America Silver 5.89%, Kinross Gold 5.19%, Newmont Mining 4.39%, and ending out with B2 Gold 5.28% on the day, not the week.